I was just saying, I'm probably leaning to where Representative Odom's leaning. When I think of investing $1,000 and at the end of a year, 2 years, or 3 years, I'm going to get $2,000 back. I don't think the market is doing that great. So if you put $100,000, I get $200,000 back in the end of 2 years. That's not a bad investment. The way I'm looking at it, I may Representative Odom, and you and I may be in the wrong business. The thing that bothers me, we're saying it's not a financial contract, it's not a loan, it's not this, it's not that. But it is if I'm advancing someone some money. Every company does it differently. So your example where the person's going to double, well, we may have someone that's someone's leaning on the light switch. We may have a company that lends $1,000 and they get back $3,000. I mean, because there's no rates, no rules, no regulations, no nothing. And folks, I mean, we're going down, we think we're helping a client or a constituent, and I don't know if this will really help to a constituent. I think we're maybe preying on people that need the help as far as that's concerned. And you start figuring out, you look at that amount of money, and the attorneys, their fees are set up front. Usually it's a third. Those are upfront fees. So now we're looking at a third, and we could be looking at 100% fee here, 200% fee here. And, this can get outrageous after a period of time. So I'll stop there. Thank you.
Mr. Chairman, if I might.
You're recognized.
Thank you, sir. And as regards to the contracts, they're clearly noticed and disclosed, and that's what has passed in all the states to include Oklahoma this past year, is that the consumer knows day one what they're going to pay. They know in 6 months increments. And they also, what's stated on the contract is what's the absolute most they're going to owe on the terms of the contract. If they don't like it, don't sign it. We're not forcing people to do this, but we're giving them an option. And I think we also have to look at the reason that these people need this option is because they're being strung out on the other end by insurance companies. As Ms. Gilroy said before, there is not a bevy of consumers lining up. The people that are bringing this bill in opposition to us is the industry in which we directly affect.
Chairman Sargent.
And I'm not going to get into a running contest with insurance companies or this type of company. Let me put it this way. One of the main things that an insurance company wants to do is pay this claim as soon as possible. They rather close these books out. If they could do it on the spot, they would do it. They do it on other claims. They'll write a check when they go out there. If you have a roof damage claim, they'll write you a check. They do not want to put this claim for 3 months, 6 months, 9 months, 12 months. They want to pay it, get it off their books. They do not want to delay it. They would like to do it as quick as possible. So to say they try to delay a claim, that's the furthest from the truth, that they're trying to delay a claim, because they want this stuff off their books, and they want it paid because they want that client to be happy. I mean, to say that, I've been in the business 39 years, and to say that delaying the claim, it's too much time and trouble. If the adjuster has to go out there 5 times, or if the agent has to be talked to 5 times, they don't want this. They want this off the books as soon as possible. So that's a fallacy when you say dragging out the claims. Thank you.
Well, we can talk about this issue. I don't think this has as much as it does probably impact, but we probably need to stay on the subject a little.